Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, May the 8th, and I want to take just a brief minute to discuss what markets did last week, as it was another positive week in the equity markets as we continue to recover from April's sell-off, with the S&P 500 being up 2.92%, so a very good week. The mid-cap index was up 3.54%, so even better, and the small caps as measured by the S&P 600 were up 2.7%. So last Wednesday, on the 30th, we received our first read of the GDP for the first quarter of 2025, with the expectation for it to be a positive read. However, it was down 30 basis points or 0.3% on the quarter for the first read. So why have markets not gone crazy off of this or sold off of this? Why has this news hit the marketplace and we're not in sell-off territory, correction territory in the market? Well, there's a couple of reasons for this. Number one, the reason why you have a negative read on GDP was the amount of inventory ordering to get ahead of the tariffs. That was well outside the norm. Had you been at a normal inventory rate, you would have had, or an import rate, you would have had about a 2% growth rate had we been at consistent levels of imports that we have been at. So the build up ahead of the tariff announcement on April 2nd is one of the main reasons why you saw the GDP be negative for the quarter. The other reason why markets are continuing to move forward is off of corporate earnings. So 77% of companies that have reported so far this quarter, Q1 earnings for this year, they are beating. And not only that, they're beating by an average of about 8 to 10% on their beat. And so that has provided a platform and an opportunity for markets to move higher. Because remember, at the end of the day, corporate earnings are what drives the market forward, and they're listening to the commentary. And guidance has been pulled by many, but also increased by many. So at the same rate that you're having some companies pull back their guidance, you're having other companies report and raise their guidance on their prospects for the year. AI is coming alive again, as we were really tuned in this earnings season to see the big tech companies, the Microsofts, the Amazons, the Metas, the Alphabets. Are they cutting back their CapEx on AI? And they are not. And some are actually increasing their investments in that. And so those reasons are why that we have not seen a sell-off right now off of that. The other reason is there is some things coming down the pike that we believe will keep us out of a recession, and those are lower regulations and lower taxes. We believe that there will be a bill and a deal done that will cut the regulations back, which will allow business prospects to improve. You'll see some mergers, some acquisitions, and things along those lines, and some green shoots in some areas that we've been looking for those for a little while. So those are the reasons why we think we don't foresee us at this current moment going in and having two negative quarters. The other thing to keep in mind is how well employment is holding up. Employment numbers are continuing to be strong. We added 117,000 jobs for the month of April, which was a surprise to the upside, and employment remains strong. And as long as people are working and making a good, healthy income, we can continue to keep the market and the economy moving forward. So if you have questions about how to navigate during this time and this challenging time of when are we getting trade deals like we got today with the UK and the United States, and that's catapulting the market higher as we're speaking on Thursday the 8th. It's moving higher off of the news of a trade deal there, and we'll continue to see movement like that up and down on trade headlines. So if you have questions about what to do during that, call us. We'd love the opportunity to speak to you. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.